Hi there and welcome to the Moneyman Show. This video I'm going to show you how to trade using a not so commonly used trading tool, the pitchfork. It's based on trend lines, but with some twist. Okay, so a trend line, you unite a high and another high, and then you do a parallel line, and you have the channel. Okay, as I discussed, we should buy on the lower part here on the downward channel and short on the upper part of the upward channel. Now the pitchfork unite like this. For example, you have a low, a high, and a low low, or you can have a high, a low, and a high high. Okay, you can have both the both ways. As you can see, if you select the low, high, and low low, you have a channel, and it makes two sides, a channel with two sides. Okay, so try to imagine it as two lane, where in one lane you walk faster, and in the other lane you walk slower, or even inverse the position or the direction you are going. Just like on this channel, if you were in this part, because it's a downward channel, mean that you are going low, one lower, but in a slow way. If you're going to the lower part of this channel, it would mean that you are going to be lower in a faster way, so because it's a downward channel. However, if you make this upward channel, like this, for example, it would mean that if you are on the left side, you are on the fast lane, meaning that you are going up in a more powerful way, and when you cross the right side, it means that you are slowing down the pace of the upward move, and probably even inverse the move, just like it happened here. It made some tug of war here, and then it broke down and changed direction. So this is a very interesting tool to use to measure the markets, to know the strength of the markets and where they are going in the bigger picture. However, you can also do trades based on this way. First of all, just a couple of rules. When there's a gap, just like this one, or this one, or this one, it's a no-go. Okay, so, and also the time frame, you should give some space for the pattern to develop, not like this. Okay, for example, this is a very short one. Okay, however, for example, in this one, a low, a high, and a lower low, what you do is you buy on this part the first time. Only the first time it touches this line, you short the first time it touches this line, and you short the first time it touches this line. In this case, you are not going to do anything because it has the gaps. Okay, I prefer when it opens closer to the previous close, and in the day it touches the line. Okay, it was not neither this case or this case. However, we have much more examples here. The inverse situation is you have a high, a low, and a higher high, and then you are going to short the first time it touches the upper side, and you are going to buy when it touches the middle part on the lower part. In this case, you only went to the short, so you short the line and you sell it in that exact same day, or if the move isn't big enough, like this one, it just closed almost at the same price as the line, then you sell it in the next day. You don't wait anymore. Okay, so as this move was small, you sell it in the next day. You can sell it even at the close of the next day. This would mean a very good profit here. This is one. Then we have another one here, sorry, here and here. See, high, low, high, high. Then you short the first time it touches the upper side, perfect one. Again, touch, sell it in the cover the position in the same day, because it's a very good move. Okay, and the entry couldn't be better, just couldn't be better. Then we have a few more, like here, 1, 2, 3. Then what do? We short it, either it touch this line, or we buy in this line, right? And then it didn't touch here almost, but it didn't. We enter in this one, enter here, exit the next day, perfect trade, great profit. Okay, and this is a kind of a small time frame for this kind of trade. Now, for example, here, as you can see, high, low, high, high, gap, so you don't do it like this, see, and you shouldn't do it in this one, but you can buy in the next day. See here, and it was a nice profit. Also, we have here a low, a low, a high, and a low. Even if this is not a very good one, because it's too close and the movement is too steep, it works, because it's almost 1 month the time frame. Okay, but as you can see, first time it touches the lower part, you buy here and you sell in the next candle. And you can, as you can see, then it makes a new low, and first time it touches, you buy in the line, you sell it either on the same day or the next day. See, very clean. And you can see here a low, a high, and the low is this one. This is not lower, so low, high, low, buy on the trend line, sell the next day, nice profit. Here it made a new low, so we move the channel to that low, and we will see what this brings. Perfect trade again. See here, perfect one. And the first time it touches, well, there's the gap, so you shouldn't do anything, right? But it gives you an idea of the strength of the market. So here it was beginning to move up, then it touched the middle, stay with the middle, so it right now in this part was showing some strength. However, the last few days were of rejection. See, this was a very big rejection of the middle line, and this is not good for the bulls, because when it's trending on the middle part, it usually breaks to the upside 1 day or 2 days. Usually it's the next day. When it's closer to the trend line, it breaks or touches the line the next day, and here I'm not seeing it happen, and so we should move a little lower. However, I'm going to do a technical analysis on the S&P in the next video, and because I think we are in a very important position right now, and some bigger moves are about to happen. As you can see here, low, high, lower low, correct? So you short the first time here, nice trade, good profit. And as you can see, the same thing. As soon as it grabs the middle part, it almost here the rejection lower, then it grabs the middle part again, stays here, then it shows weakness again, and then much more weakness, because it doesn't regain the middle part, and only here, but in a very weak situation. And you can see the rejection here before the flash crash. This day, for this to go up, it should have made cross the middle line to the upside the next day. It didn't. Rejection, low part. Also, as you can see, a perfect timing for the flash crash. 1 2 3. If you enter in this line, you would have made a very good profit. See? Also, to the short side, the same thing. You can high, low, higher high. First time it touches the upper part, you short, sell the next day, perfect trade, right? And here you can see low, high, low. Here it touches. Even if you bought it, you have some profit, but nothing much. However, there's a bigger one, as you can see here, with this low, this high, and this one. You can see even on this first one, you would have bought it here and made some dollars profit. However, in the second one, because then it made a new low, so the trend is a new one, and see here, voila, you enter just at the line, next day or even in the same day, perfect one, perfect entry. And the first time it touches the middle, a short, a perfect short. See here, short, wonderful. Also, this was the low of 2002, and as you can see, even this low, if you switch it to the weekly chart, you can see the perfect channel. As long as it was on the upper part, was going smooth, and then it broke the channel. Usually when it breaks the channel to one side, usually a few months after, it will go the other side. Okay, it will reverse the direction, just like happened here, reversed and went to the other side of the channel, just the same way as we did this part, this channel here. You see, it broke down, and a few months after reversed. So as long as it's within the channel, it means it's going to be there for at least a while longer. When it breaks one side of the channel, usually the side that the channel is going, in this part, in this one downward move, it's broke down, then it means that a few months after, reversed. In this one was the inverse position, upward move, broke up the channel, reversed. And with this happened the same thing. Okay, but as you can see, this one, this channel, even in 2010, it made a difference here. When it tried to regain the channel to the upside, big resistance, short. Okay, and you can do it in the weekly chart. It's very good to see the power of the market, and if we are strong or we are going to reverse. But I'm going to address that in the next video I'm going to make. So if you have any questions about this kind of trade, feel free to ask me at TheMoneymanShow@gmail.com. And if you have any other question, feel free. Hope you enjoyed it. Bye.